Bitcoin trend analysis. March 20th, 2026, Friday. The explosive March rally has slammed into an invisible wall, plunging the market into a nerve-wracking and incredibly tense standoff. Traders around the world are holding their breath as Bitcoin decides whether to trigger the next monumental breakout or succumb to a brutal and cascading correction. Zooming out to a broader 30-day perspective, we can easily see the incredible journey the market has taken. The predictive indicator tells a brilliant macro story, launching from a deep yellow capitulation phase into a vibrant, commanding blue ascent that defined the early March surge. However, on the shorter 15-minute time frame, the market has flashed a severe warning. The vibrant blue momentum peaked and sharply inverted into a plunging yellow line. This yellow shift precisely mapped out the abrupt end to short-term bullish momentum, predicting the steep corrective pullback we are actively fighting through today. Currently, the market is tightly bound between key structural layers. Overhead, the red upper Bollinger Band near the 72,500 area marks the ultimate ceiling that recently exhausted the buyers. Below us, the lower green Bollinger Band traces protective floor down near the 66,000 area. Our price is oscillating dangerously near the center, fighting tooth and nail just beneath the descending white moving average line. The liquidation heat map uncovers exactly where the whales are preparing to hunt. A blazing, concentrated wall of short liquidations glows brilliantly between the 70,500 and 71,000 price zones. Reclaiming this overhead liquidity would trigger a sharp, violent squeeze yielding a quick 1.7% to 2.5% pop from current levels around 69,350. Conversely, if buyers lose their grip, the market will rapidly seek liquidity lower down. A massive void of trapped long sits as a downside magnet spanning the 65,000 to 66,000 range. Liquidating these traders would mean a sharp 5 to 6% drawdown before finding true safety. Trading volume confirms the heavy hands of the bears. We see towering purple spikes of volume hitting exactly when the market attempts to push higher, interpreting clear institutional distribution meant to crush bullish rallies. The most intelligent strategy to trade this current environment is defensive patience. Entering the market directly in the middle of a high-conflict zone is pure gambling. Wait for the heavy volume stop hunts to play out near the extremes before taking a directional bias. While the immediate localized pressure is fierce, the probability of complete macro monthly trend reversal is still moderate, but rising quickly as price compresses. Condition for continuation. For the dominant March bull market to continue its massive run, buyers must generate an earth-shattering surge of volume. They absolutely need to blast back above the white moving average, violently consume the bright yellow liquidity cluster at 70,500, and use that fuel to lock in higher highs. A victorious breakout here clears all resistance back up to the high 72,000 territory. Condition for reversal. The short-term correction transitions into a horrific macro trend reversal if the sellers win the current skirmish. If price cannot reclaim 70,000 and instead faces a brutal rejection pushing us under the localized 68,000 support structure, it is over. A high volume loss of this level will spark a relentless cascade toward the lower green Bollinger Band, annihilating the massive pools of long liquidity clustered near the 65,500 lows. If you're enjoying this video and want to see more just like it, make sure to hit that subscribe button. It's totally free and helps us keep creating awesome content for you. Don't forget to like the video so we know you're loving it, and drop a comment to let us know your thoughts. We read every single one. And if you think someone else would enjoy this too, hit that share button and spread the love. Let's grow this community together. Thanks for watching. You're the reason we do what we do.